Trump takes over. U.S. Securities and Exchange Commission Chair Gary Ginsler will step down on January 20th when President-elect Donald J. Trump's administration takes over, the agency said on Thursday, ending an ambitious tenure that saw him clash with Wall Street and the crypto industry. Oh, so that's fun. Okay. I thank President Biden for entrusting me with this incredible responsibility. The SEC has met our mission and enforced the law without fear or favor. Ginsler, who was nominated by Democratic President Joe Biden in 2021, said in a statement. Known for his hard-charging style, Ginsler... So wait. Oh, I think he's stepping down because of the fact that he's not going to be bullied into doing what Trump wants him to do. Which, I don't know what Trump's going to want him to do on Wall Street. Like, at the moment, like, the stock market's going, like, way up. Like, for example, if I went to Yahoo Finance... Like, for example, this is the S&P 500... We're still, like, yeah, we shot up on election day, and then we came down a little, we dropped massively, and then we're rebounding at the moment. I do believe it's, history has shown that even after big, like, market crashes like this one from COVID, or, this one from the financial crisis, or this one from the dot-com bubble, like, it always rebounds. I don't think, if anything, I think Trump might do something that's going to cause the market to crash, because the idea is when the market goes down, you buy the dip. That's how a lot of investors actually do this. They actually buy it when it goes down. So I feel like Trump, I don't know. So maybe if Trump tries to do something like that, maybe that's why he's stepping down, because he's not going to be forced to do that. Let's see. Known for his yard-charging style, Ginsler had an ambitious agenda to boost transparency, reduce systemic risk, and stamp out conflicts of interest on Wall Street, completing dozens of new rules, some of which have been challenged in court, because of fucking course. So yeah. He boosted transparency, that's communism, reduces systemic risks for everyday investors, that's communism, and stamp out conflicts of interest on Wall Street, that's communism. Completing dozens of new rules, so we can't, you can't do it because the court will wag their finger at you. Among his major accomplishments were changes to increase the resilience and efficiency of U.S. markets, including speeding up trade settlements and overhauling the $28 trillion treasuries market, as well as a number of rules boosting investor disclosures and corporate governance. So basically, like insider trading, we know about all the insider trades that are happening because of the rules that this person was passing. The Baltimore native also successfully implemented rules mandated by Congress imposing SEC oversight on auditors of U.S.-listed Chinese companies, ending a decade-long tussle with Beijing that lawmakers said had put U.S. investors at risk. On the enforcement front, Gensler's SEC broke new ground with a multi-year effort focused on Wall Street's use of text, WhatsApp, and other unauthorized channels to discuss business, levying more than $2 billion in fines against dozens of firms, including J.P. Morgan and Goldman Sachs. So that's red-pilled, and we're all for that. But his sweeping agenda and uncompromising posture sparked intense pushback from Wall Street, as well as congressional Republicans, and even some Democrats. The U.S. Chamber of Commerce The U.S. Chamber of Commerce, Managed Funds Association, and other groups sued in the conservative-leaning Fifth U.S. Circuit of Appeals and elsewhere to overturn at least 8 rules, arguing they are unjustified, harmful, or beyond the SEC's authority. Because, as we know, we do not live in a country in which for fuck's sake, the people are turning left. And yet our government is turning right. How is that possible? How is that fucking possible? But anyway, so Jill Fish, a University of Pennsylvania law professor specializing in securities regulation, said Ginsler would depart with a mixed legacy. I think there are clearly some victories, but I would say he came with a fairly aggressive rulemaking agenda, and most of that either hasn't or isn't likely to endure. So, that's fun. So, if you have investments, just understand that the guy that was protecting your investments is, is like, he's gonna he's leaving because Trump. In a major blow to the agency, the Fifth Circuit ruled in June that the SEC did not have the authority to oversee the $27 trillion private funds industry. That loss and other legal challenges have slowed the agency's rulemaking this year and could impede the agency in the long run, especially under a Trump presidency. Let's see. Where was I? Long run. Here we are. Just before Gensler's announcement on Thursday, a federal judge in Texas struck down the SEC's overhaul of Treasury dealer rules adopted earlier this year. Some critics struck down the SEC's overhaul of Treasury dealer rules adopted earlier this year. So anything that could be there to, designed to actually hold these Wall Street giants accountable to make sure that they don't fuck up the market, so that, everyday people who just happen to hold, an index fund or maybe hold stock in their business, they don't end up getting fucked over by the unnecessary garbage that happens on Wall Street. So Trump has not said who would replace Gensler, although he is widely expected to appoint one of the current Republican SEC commissioners, Hester Pierce or Mike Ayuda, as acting head of the agency. Reuters previously reported that Trump's transition team is considering former SEC officials for the job permanently. There you go, everybody. He's going to do it permanently. So Gensler's successor is expected to immediately end the crypto crackdown, review many of Gensler's rules, pull enforcement actions, and wending their way through the courts and pursue rule changes focusing on promoting capital information. So I want to talk about the crypto crackdown, why I think crypto should actually be regulated. So let's go to finance.yahoo.com. Let's do BTC. We're going to use the most popular Bitcoin. So, oh shit, 98,000. Did it actually bump over 100? Jesus Christ, it's getting there. But anyway, so this is all time, right? So I want to actually, I think I have to bring it into full screen. So, alright, so this is all time. Still not a way for me to actually, alright. Let's try, no, I don't want to go, I don't want to fucking upgrade. There's no way to go back that way. Nope. Alright, here we are, 2022. So this is the initial Bitcoin meltdown. So they experienced after COVID hit, they experienced this big rally because everybody was left at home and they were investing their checks. Um, and so it blew up the value of Bitcoin. People were heavily invested into it. And then, like they needed their money back, so crypto, so people collected their profits. It shot back up briefly, came back down, and went back up where it held steady for, let's see, 2020. Wait, what month? 10/13/2021. 11/15/2021. Okay, so for about a month it held steady here. So, with that said, eventually the the SVB bank collapse occurred, which caused crypto to crash. So you can see there's plenty of ways in which you can know in which ways that crypto is going to be affected, but it's all in hindsight. Like this happened multiple times throughout the history of the crypto market. Let's go here, right? So we're talking really huge price swings. So this is $1,030, right about I guess here somewhere, and then it just all of a sudden shot up, right to what number is this? Like 20,000. Now there's just one problem with this. Everyday investors, I'm of course different because I did not want to lose my life savings, but most people who invest their money do not know that you're not supposed to, that day trading is actually a very, very cancerous way to try to make money, and in fact you're more likely to lose money. So they'll see that like this line is going up. It's going up, 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 and then they see, oh shit, it just came back down. Buy the dip, buy the dip, buy the dip, and then it goes back up, and now they're like, keep pushing it higher, and so up here, a bunch of people still buy in, but you know what? Everybody down here made a shit ton of money. They don't know that that's how that works, and so when these people over here who made a shit ton of money sell their position, it pushes the price down, which forces it this way, down this way. So yeah, people come in here not knowing how these price fluctuations happen, that it's all about supply and demand. And to make matters worse, there is absolutely no way for you to check financial information about this, whereas the SEC, sec.gov, has a feature called Edgar, has a program called Edgar, and you can actually search for, let's see, latest filings. I think you can go here and search for it. So company, let's say the company I work for, Walmart. So here I type in my company's ticker symbol, WNT, and then the form type, I don't know, 10K, because that's the one we want. We want the 10K. Filings. See if I can find it. No matchings? Alright, let's try. I forgot how to do this. Let's try here. Try it again. Alright, so I need to figure out. Alright, Edgar, search home. Maybe WMT. I guess this will work. Oh, okay, here we go. So annual reports. This was their annual report for year ending in 2024. So this is what I'm talking about when I say that you can actually verify with stocks, unlike with Bitcoin, whether or not a company is actually a safe investment for you to actually put your thing. You would come down here to where it says financial statements and supplementary data, and then you got multiple things. But the main things, obviously, this is really technical stuff, and the everyday investor, does not understand this stuff. I have no background. I have no degree in stock analysis or in any sort of securities analysis like that. But I did the research that most people just don't have the time to do because they work a full-time job. And so I was actually able to figure out a way out of the spiral of buy high, sell low, because that's the problem a lot of people suffer from. Basically, all you want to do is you want to look at net income per common share. So $1.92, $1.43, $1.63. And so you can actually see where these are coming from. And then their dividend that they pay out to shareholders is 83 cents a share. And so you can actually see that it's way safer than, because that's like a 83 times 2 is 166. Yeah, 166. So it's less than 50% of the net income per share that you'd be receiving. Right? Dividends declared per common share. So that was before the stock split, but last year. So, right? No? I don't know. But anyway, like, there's ways for you to actually look into the company, that you're invested in. I think you can do similar things for, like, mutual funds and other things like that through the Securities and Exchange Commission. But, but yeah, so other things that you might want to look at that you can't get with cryptocurrency is understanding debt. Like, you need to be able to understand, like, the balance sheets. So, like, for example, the current assets of the company, 76 billion, $76.9 billion in 2024. Then you add the long term, that brings it up to $250 billion in assets. So, yeah, you got your liabilities here. So there's just so much that you can get by reading a 10K, and that there's nothing like that for crypto. And so people just treat it like an actual, like they're going to the casino. They don't treat it like it's an actual place to store your money for your retirement. So it's like when they do that, they end up missing out on a lot of fucking money because they don't understand how it works. They get exploited by people who actually do know how it works. And it's like, and I really do believe that ending the crypto crackdown, I don't think calling it a crypto crackdown is appropriate, but I do think that they should not like end the crackdown. They should continue trying to reform the crypto industry, at least in the United States. You know what I mean? Like, there's not much you can do because I don't think there's a way to actually gain access to any healthy information about it, but there's got to be something you can do, like to prevent another SVB collapse from happening. Because right now, like, I have money in crypto. I do not want, while we're up here, 98.3, I do not want another collapse like this. I mean, if it does happen, then I'll put more money into it at the low point, because all I can really rely on here is technical analysis. And it shows that like index funds and other securities, after crashes, they have tendencies to rebound. So history is showing, so, maybe it'll continue into the future. I don't know. But I don't want another one of these if you catch my drift. This is to go back down to 20,000, or would be like a divided by 5. There you go. To go back down to 20,000. That's basically 20%. So, like, definitely if you're investing, you're trying to like grow your money for your investment, your retirement in the future, definitely do your research, understand how these systems work. Don't allow yourself to be exploited by the top 1%, because they know what they're doing. You do not. And they know that, and that is what they're taking advantage of from you. It is very easy to make money off the stock market. It is very easy to, but you can't listen to like finance gurus and crypto bros and fucking Elon Musk, with his Dogecoin and shit. Like, granted, Dogecoin is doing pretty good. I think it's like 30 something cents for Doge. When I was using Coinbase, I think it was like 8 cents for a Dogecoin. So once again, I kind of missed out on another opportunity. But at the end of the day, there were cryptocurrencies. I don't remember if it was Solana, but I think that one of those was acting like a stock. Like, it was actually connected to an actual business, and you could actually vote, but you didn't get shares, you got coins. Like, sorry, but if you get voting rights in a company for buying something associated with them, that's called equity, that's called ownership, that's called a stock. And so there was clear case of them trying to skirt SEC regulations, and that's one of the ways in which Gensler was cracking down on the crypto industry. Like, you cannot fucking do that. Like, you can't disguise your stock as a cryptocurrency. If people want voting rights in your company, you need to do an IPO, and you need to go public so that people can buy shares in your company. You should not be going, because like I said, crypto. The problem with crypto is that there's no way to actually look at the business. There's no transparency. There's no balance sheet. There's no income statement. There's none of that. So you can't like, make sure that the history of the asset that you're buying is actually going to be worth shit in the end. You could buy, like, Bitcoin tomorrow could be worth 2 pennies. Like, I mean, that would be a really, really big collapse. A very, very, very unlikely collapse, but it's possible. I've heard of companies, shares costing hundreds of dollars, imploded down to less than $1 a share. It's possible. So, But it's like, that's why we need income statements and balance sheets and things like that, and transparency overall, because you can't get those income statements, those financial documents with crypto. They're not companies, they're currencies essentially. And to not have access to the underlying information regarding the asset, it puts you at risk. So yeah, no. This industry, capitalism under Trump is going to be horrible. But then again, that's why I'm a socialist. That's why I hate capitalism. I hate capitalism. I would much rather have my money stored away somewhere, like in my safe in my bedroom, than. But I don't know. I just don't want inflation eating away at my money. So anyway, well, that's the end of that segment. So if you enjoyed this segment, please hit a like, follow me on TikTok. I don't know why I'm promoting my TikTok. I really don't like using it. Follow me on YouTube. Follow me on Twitch, and also feel free to join my Discord server. You can find that information on on my channel. I'm thinking of building a website for my thing. But yeah, you can see my channel right here. If you go to add links, you can see, oh, I gotta add my TikTok. Not sure why, but I guess it's just so that people know that that person on there with 1.2 thousand subscribers is indeed the same person on YouTube. I don't know. So let's see. Take that. Go here. What do I do again? Right. Customize channel. Blah, blah, blah. Allons enfants de la patrie, le jour de gloire est arrivé. Contre nous de la tyrannie, les tendances sanglantes élevées, les tendances sanglantes élevées. Tendez-vous. There we go. So that's everything right there. So on my YouTube channel, you can find all my links to Patreon, to Twitch, to Discord, to Blue Sky, to TikTok, although somebody gagged me. Ish. So, yeah. Oh, wait. Oh, yeah, the Onion bought InfoWars. That was some classic shit. Like, yeah, I would bow my head in shame and check our forever if, or check out forever, I meant to say out, forever if The Onion, a satirical news article, bought my show that I spent so much money and worked so hard on, and then made a satire out of it. Oh my god, I'm glad I'm not InfoWars Alex Jones. Yep. So yeah, if you enjoyed this segment, please feel free to follow me on my socials. I got Patreon, Twitch, Discord, Blue Sky, and TikTok. So thank you for watching this segment. I hope you enjoy, I hope you enjoy. Leave a like, and share my stream. Bye.